Riley Arbon,
Very special.
talk to me about your role with Folio.
So I'm a property investment advisor at Folio. So what that really entails is, really getting to understand the client, their objectives, what their current circumstances are, and where they're trying to get to. Helping them put together a bit of a strategy on, what the next purchase looks like and how that fits within the current portfolio. And then sort of introducing them to our team of buyers agents to work through that.
I think you're underselling yourself there, aren't you? I think you're, 4 or 5 years buyer's agent experience within the business, head of research as well with the business. You've got a few different hats on at the moment, aren't you? What do you find most fascinating with the variety of roles you do? You do the advice, you really lead that market research department that we have, along with our chief economist, and you help support on the buyer's agent stuff. What are you most passionate about?
Yeah, look, I think there's definitely rewarding aspects of every single, every hat that I wear within the business at the moment. I think the research is probably what I'm personally interested in, and that doesn't really feel like a job for me. I love researching and actually seeing how the market is performing at that point in time and sort of seeing how it responds to the data that we're actually looking at. But then in terms of, actually helping clients and see them execute their strategy and get to where, sometimes, outperform their own expectations, that's obviously really rewarding as well.
Yeah. Talk to me about props. We talk about PropStack throughout the business as an internal portfolio management tool that we use, but we're going on a bit of a journey with PropStack at the moment. Talk to us about what we're doing with what are we doing with PropStack at the moment, and where do you see that going as a tool for our customers or clients?
Yeah. No worries. So PropStack is, it's a bit of a work in progress at the moment. But, it's really to give clients that are looking to build property portfolios the full picture on how to do it and help our property investment advisors sort of, string everything together and sort of make sure that we can execute in the most effective way. So that starts with looking at the overall portfolio of a client, doing the full analysis on the current properties that they hold, looking at their, some risk metrics in terms of what their debt to income looks like, is their cash buffer healthy, what their overall loan to value ratio and equity position is. Then it's also doing some modeling around, what happens if we, buy a property in Melbourne versus Perth, or two properties rather than one asset at a higher price point, and seeing how that affects their portfolio and also their risk tolerance. But then obviously we, like you mentioned earlier, our research, that's all incorporated within PropStack as well. And that's arguably the most important point, making sure that you're buying properties in the right stage of their cycle. Obviously to make sure that we can buy capital growth focused assets as quickly as possible and as early on in the portfolio, so we can get those results, down the track.
And for property, like, you've been in the industry since, I guess, you left university, so your whole career's been property.
Yeah.
Well, why property?
Yeah, so this has been beaten to death a little bit, but the big thing is like property versus shares. Obviously with property, you can leverage significantly more than you can with shares, which if you do it correctly, and you follow the right due diligence, buy in the right markets, you can really amplify your returns. So that's, obviously just facts right there. But why I personally prefer property as well is that it's a little bit more hands-on, so you can control it a little bit more with, value add uplift and, being able to extract equity out through renovation or developments and things like that. There's a few different levers you can pull rather than, when comparing it to some other asset classes.
Yeah. And talk to me about your current clients. So at Folio, we deal with a range of clients, from a first-time investor all the way up to the serious portfolio landlords. Being one of the senior members of the team, what's a typical client look like for you that you're helping on a day-to-day basis?
Yeah, I think, we help clients from, first-time investors all the way through to, your more sophisticated investors that have been around for a while on high incomes. So I do spend a time with a range of different, investors, but I'd say a standard client that I deal with at the moment is someone that's time poor, that obviously like to take advice and trust professionals to do what they do best. And I'd say that's typically where we sit, and the clients that we work best with as well.
Talk to me about due diligence. not only from a advice side of things, but also from your background in the being a buyer's agent as well. How important is due diligence when selecting the right asset type?
Yeah, so due diligence is, like you can get the, you can get the strategy right, you can get the market right, but if you don't buy the right asset within that market, like it can untie the entire strategy. So it's really understanding what a quality investment grade asset is, and then making sure that you're going out and buying the property that it's going to be able to perform for the long term, but also something that is going to have resale value. If it's something that you can actually that you might need to sell in the future with the aim of upgrading a PPOR or reducing debt elsewhere in the portfolio, or whatever that may look like. It's making sure that it has a resale value. So that's looking at, properties that aren't compromised in any way. So steering clear from things like main roads and too close to commercial and industrial zoning and things like that, where a typical owner occupier would steer them away from potentially buying that asset.
What about speculative assets? We hear a lot in this space. The buyer's agent industry is now overcrowded with people we call spruikers, and it seems like there's been inundated with this new era of buyer's agents pitching these speculative assets that are usually at cheaper price points. So a first-time investor usually goes for them. What is a speculative asset, and what's your opinion on speculative assets?
Yeah, I think like we prefer blue chip assets that have a proven track record over the long term of performing, quite consistently over the last 30 or 40 years, or how long we have the data for. In terms of, the different aspects of an investment, where typically you have to compromise somewhere. You've got capital growth, you've got cash flow, but a lot of the time people forget the third one, which is risk. So typically where you go for these high capital growth, high cash flow assets, typically you're either looking at, something that's out in a regional area that has a low population center, or maybe something that's in a, high density apartment complex or something like that. Whereas it's been flat for 15 or 20 years. It might go through a short boom of 2 or 3 years, but that's, it's really the risk that a lot of people forget about. And you see a lot of these other operators out there that, kind of leave that out of the equation. Mm. So we like to look at areas that are, typically proven track record over the long term.
And on that note, from whereabouts, are you seeing the best value in Australia right now from an investment standpoint, looking at, 2026 as a whole?
Yeah, so going into 2026, look, I think the two markets I think to have a close eye on are Perth and Melbourne. They're both at very different stages of their cycle. If you look at Perth, it has the strongest fundamentals in the country right now. And that's, the historic low supply, the highest population growth on a percentage basis at the moment. And, that's looking at more than the next 2, 3, 4 years that I think that's going to perform the best. But if you look at Melbourne right now, it's just had around a 5-year stagnation period. It hasn't had that in the last 25, 30 years. So arguably you could say this is the time where you could buy at the highest discount.
Yeah.
In Melbourne at the moment, the data is really starting to get there as well in terms of, stock on market is reducing. It's affordable in the context of, if you compare it to some of these other markets, and also where Melbourne has been in the past. So I think Melbourne's probably the best in terms of if you expand that window to 5 or 10 years, I think that's going to be the best performer. But Perth is probably more of a, has the best fundamentals for the short term.
What would be your one bit of advice for either a first-time investor or someone looking to add to their portfolio before they start engaging with a real estate agent or a buyer's agent? What would be your one bit of advice for those clients?
I think just do your research. Like, just make sure you understand what you're going to get out of that asset and what the plan is. And I think what a lot of people forget is when you're going to buy that property is typically you need to be looking at it through a 10-year hold period. And you're tying up a lot of the times, especially if you're a first-time investor or buyer, you're tying up a large component of your borrowing capacity within this property. So it's looking at what's on the horizon, like, whether that's marriage or kids or upgrade, buying a principal place of residence or whatever that may be. It's sort of understanding that you're tying yourself to this asset for that period of time. and making sure that you have all your, you've planned everything out and how it's going to perform, and so you can sort of fit the pieces in like that.